we have the previous week high sitting here. We took the weekly objective, which is the previous week low, and that's the range we marked in terms of swing high and swing low. So price reached into equilibrium. We can see there's a bit of consolidation building within just the shelter candle on daily, and we kind of respected this level. Such a genius way of manipulation of price. So now I'm going to 4 hour. So ever since we kind of have a bit of a reaction. So for example, this here will be overbought on 4 hour supply zone, and then we have another demand zone sitting here where with previous day, the Wednesday and Thursday, Wednesday high and Wednesday low created, price fell to break the range, so consolidating within, price respecting the demand zone by 50%, sitting around here, price re-enters the 30% and impulse higher because why? We have left liquidity sitting at this area. So we're looking to sweep that. And then at the same time, do you see what I'm saying? We don't actually have a firm body closure over this area. So I'm looking at the swing high as in the previous day high and previous day low as both areas of liquidity. But now remember or see this price action, supply and demand zone failed to create busy and 4 hour, 4 hour busy and 4 hour city at the same time. So basically not only just saying this area as liquidity, this is also liquidity because the previous day low and also Wednesday low, these are significant swing points. So now going on this time frame, got BPR reaction on 1 hour. This one here, we have a new 1 hour busy forming with the expansion of this candle here. So Wednesday high and Wednesday low, we're reacting off reaction created from Wednesday. This here's a reaction from Thursday. So nevertheless, that kind of give you a bit of a hint where price is likely to go. With this area here, we got a 4 hour, we have a BPR on the 4 hour. That's our inversion. That's holding up price. That's our volume of orders that we're picking up from. Okay. So now going from here, we can see this clear consolidation reaction from a BPR on 1 hour failed to create new city. So this is a clear consolidation. Now Asia high has swept that level, so reacting to potentially an overbought on lower time frame to go lower. So you can see here we've got a swing, we've got a trend line 1, 2, 3 in terms of trend line. Then we're going to go to 5 minutes. So 5 minutes again. This here is a Bear Valley area. 1, 2, 3, 4, 5 roughly. Let me close all this so you can see a bit more clarity. So I'm going to mark a few trend lines and bear with me. So this here first of all will be roughly a trend line. We have this body break on 5 minutes, but why does this not actually hold? Okay, so that's a question for you, and you can tell me the answer later. So until we have this body break, that's a confirmation. Because why? Price needs to break that level by body, yes, but we need to break a structure first to confirm, to be on the safe side, really. Sometimes my setup allows me to enter before confirming the break because simply the level that we swept is so significant. But here, price kind of already swept a 1 hour internal range recent here. We have a 1 hour busy here. This here is a BPR on the 4 hour, makes it more significant. Because with this delivery of the 1 hour, it didn't actually break structure. So then it could be referred as a retracement trade, but won't hold. Anyway, I'll talk about this one shortly because you will find it quite interesting. So now we're going to go to 1 minute. That forms another story of the trend line. So now I have this trend line on, say for example, I have this trend line on the 1 minute. I have a body break, but can you enter? No. Why? There's a failure of breaker structure sitting here. Okay, it's a failure of breaker structure. So what we see is that this here's a clear liquidity grab of the structural high. So liquidity grab of a structural high, yes, it can deliver, but itself will become a very, very enticed liquidity. Because why? Because it's already grabbing liquidity from an area that has already been mitigated. See, there's an order block from here that's already been mitigated. Mitigation of an already been mitigated area makes that liquidity. Although it may break structure, even so you can see down below we can break structure, but ultimately it's an area of liquidity. So I missed out this trade because I only started my chart around 7:15 because I was being emotional review and also want to make sure the structures and everything, my steps, my protocol are well followed, which I failed to follow one of them because the setup there is present, but the concept there wasn't correct. My concept was to actually, my bias was to go long, but I was enticed to go short here because it meets my setup. See, so your confluence or your high time frame, your draw, that must be your priority. Like that's how I should see it and how I should always see it. I don't know, maybe because I was too tired yesterday, etc. But nevertheless, no excuse. Okay, now going on 1 minute. So 1 minute, we have a swing high here and connecting the points here. So we have another swing high above. So here, 1 minute, got this trend line. So we delivered the price repeater. That will be about 10 pips, but it's not safe to long or short in this area, in this box here, until we firmly break structure above. So sitting here, we have possibly like a higher time frame break here, in this area. So we've got body break. That could be a last structure on the price. You see, there's a breaker structure here by body, okay? But that's not confirmed until we have another true body break of the trend line. So telling you there's a change in trend. So then you can look for a setup when the price retraces to go higher. But of course, price, the ultimate drawn liquidity is the Asia high for the time being. Okay, so why would this not hold? First of all, we do have a mini trend line falling through. This break first time, but it's not actually breaking below simply because it didn't form the next breaker structure. Okay, so now we'll continue to break higher. Price broke structure once, pretty much, or even broke structure here, for example. And this here, I wouldn't see it as a breaker structure. I only see the breaker structure as being this level. And then why I have marked this area as being the price. So I'm marking it from the structure high to the structure low to the structure high. So in terms of being the price, 50%, it was never met. It met here, but that wouldn't hold in terms of the trend line. This is in the premium of the trend line, already showing signs that we want to break it, but we failed to break. So because I have this body break, so I'm going to change the idea to say maybe this area isn't going to be revisited for the least. So that's my structure in terms of being the price. And you guys can kind of see that anyway. I didn't end these trades because it's outside of session time, but that's just to show the intention. And I will talk about this one because I think it's very interesting. I think everyone should kind of know. So from this area, we got I entered a short here because concept didn't make sense anyway. Because first of all, the origin of this trend line from the high time frame is this area here. That's a 15-minute trend line. That's an Asia high. So if we are showing signs of breaking it, we should continue breaking that level. That's the ultimate goal. That's what you should do. So from this area, price retrace, but then retake the structural low sitting here. That's the structural low. I mean, this here could be another low, but in terms of fairness of price, that's a structural low to me. So now, price sort of reacting to this here will be a snap, and this here is a snap reaction. Again, so price impulse higher, breaking. There's no real trend line here, but this M1 swing point, as in there's only two swing points, so you can't really say it's a trend line. It's a straight line basically. Full liquidity, hardly any big expansion. So once we break a hit, that's when you're looking at. This here is a snap mitigation. The price eventually mitigates snap mitigation to break higher, kind of complete objective. All right. Now price 1, 2, 3. There's a trend line respected. So we have this first initial attempt to break structure. We have a breaker structure sitting here, but that doesn't count because the body break happened after the breaker structure. Now confirmation that this is surely a change of order flow. So usually what happens is that when you have a break confirmed sitting here now, a confirmed break, this here is a protected high. And then in that sense, when you have a true confirmation of the break, this here is a protected low. Okay, so you can do something like this as well in terms of how you enter. So you can do, like for example, sweep this liquidity, or say mark roughly the 50% of this area, which DD Forex can become quite handy because you don't actually have to do 50%. You can do 30% for a quick tap as part of the swing break sequence from Stoic Trader sitting here. So at that 30%, and this here is a protected low like that, and target all the way to the previous day high. So this here is something that I think you guys will find quite useful of. So again, this here actually meant one more setup I didn't enter because it's outside of my session time, and I have some kind of things to do tomorrow, so I'm not going to bother. A bit of side liquidity, but the structure high is sitting here. Actually, no, it's sitting here. Why? Because the structure high in terms of high that's taken is quite fair. It's above the 50%, the majority of the body. So now going from here, we've got a break structure that's a protected high. It will not be taken lightly. Price didn't actually enter the PY that I'm interested in. So what it did is that it went into the fairness of price from this structure high, structure low to the structure high, going into 50%, sweeping sell side liquidity, then reach to my PY. This here is a liquidity grab, go between. As in, it's only a temporary trend to deliver. So, okay, now we have this trend line. We broke it, we confirmed the breaker structure, so this is not likely to hold, okay? But price still impulse higher. So what can you do? What can you do really? So in order for us to trade this higher, kind of know the answer already. Yes, we need to break this by body. Yes, we kind of broke this trend line by body. Yes, but nothing is confirmed until we truly break structure. So until we break the structure, sitting here, and say for example this is another broken structure, that low, actually this low would be, this low will be protected, and this low will be protected extra because you're looking at the overall structure. If the actual low of this range is at premium when it has a bullish broken structure, then your structural protected low will be sitting here, or it could be an intermediate, short-term intermediate low. Because it failed to break structure and it's seemingly reacting to order block, and then we already have this level, what you could do is that you could mark also the 50% of this area, or whatever you see the VPR fits you or whatsoever. You can look to target with a stop loss sitting here, or it's a protected level, and just target to the draw sitting here into the 15-minute busy for the least. Okay, I know the chart can be quite messy, but you can see my notes here. Intraday draw liquidity hit, extra high taken. The 15 minutes movement has no busy, constant liquidity grab. But when there's constant liquidity grab or a true break in trend, there's always going to be at least 1 or 2 price point where there's an order block respect. Just gonna wait for it. Just gonna wait for it. Wait and assess. We have this area, we have no busy. See? So we have a SIBI formed, breakaway gap, quick reaction, closed. And you can see on 15 minutes it's like a changing character. Of course, we have another 15-minute busy. We may look to react off that area, but in terms of marking the other area of fairness of price, the swing break sequence, the DT Forex zone, the 30% is really similar to where I just marked roughly. And then look, if you saw your changing character, you can look to enter. But the downside or another acknowledgement is that, okay, now we created a full, like a higher time frame trend line sitting here. Possibly just use this area instead. Marking on a trend line sitting here. So in order for us to go long, we need a firm breaker structure. What you could do is that before even the breaker structure, this here's your demand zone. You have a clear draw liquidity, the clear trend line, because sometimes you don't want to be part of the trend line. You don't want to be part of the trend line because then trend line is weak order flow. Okay, so here, if you see your changing character, you don't have to target all the way to the high. You can target perhaps somewhere here, maybe. Look at your order blocks or look at your preferred method of entry aligned with your time frame. Then look to target liquidity or the existing range liquidity. But to be honest, right now, I'm more biased to say, okay, price need to firmly break above this area and form a breaker structure just to be on the safe side. But we can enter just a lot higher risk because you wouldn't be wanting to say you can look to enter here as a retracement with a body break, depending on where price coming from. So for example, this here's a 15 minutes busy. Where price reacted from, the Asia high, was within a 1 hour BPR. So my understanding is that, okay, if we have a 1 hour BPR, possibly that price could be resisted until we have a firm break structure. Because like where price coming from is very important because that gives you a confluence to say you can possibly enter before the breaker structure. Of course, breaking the structure is always the safest approach. I hope you guys have a good day and just go from there.